Hello traders, welcome to your daily market update for Wednesday the 20th of May 2015, and the market has been rocked by three key major events in the pound, the euro and the US dollar, all creating a lot of volatility last night, and I think that we are going to continue to see that those major themes roll out tonight. We also have the Bank of England minutes and we have the FOMC minutes, so we have a lot to keep an eye on as well as a lot to monitor from yesterday. Yesterday we've seen that ECB Member Coeure mentioned in a speech that he did in London that the minutes to only just got released yesterday, and the ECB, he mentioned, isn't bound by zero interest rates. And this really rocked the market. We were very surprised by this, as everyone was led to believe that now that they have cut to zero, they are looking to use other measures to provide stimulus to the economy. Yet he's really going out of his way and defining that that isn't the case, and they are able to accommodate monetary policy even further by cutting to below zero if it's necessary. The market was taken by surprise, as I said, and we're going to see if this is actually going to follow through, and the market is starting to price in the fact that that this is a possibility, but we have to keep in mind that it definitely hasn't happened yet. So we just need to keep in mind that he's just saying that it is a possibility. So we'll keep an eye on the falls. We'll have a look at the technical charts, and we'll move some trading opportunities out of it, I'm sure. And then we had the pound deliver some deflationary data. So the data that we come out from the pound was, unfortunately, I don't have it here on the charts, but was actually in negative territory. So the UK economy is contracting, and the market definitely sold the pound off on the back of that. It shouldn't be too much of a surprise to the market, as Carney did warn everybody during his last press conference that we could see deflationary results in the short term, but in the long term he believes that we will be seeing a pickup. So things are going to get bad before they get better, so to speak. And but the market was definitely taken back by it. We hadn't started pricing it in yet, so the market is certainly pricing it in now. And you can see that in the price action, which we'll have a look at in a minute. And the US dollar was trading higher on the back of the weakness from the euro and the pound and all the other currency pairs that were going on. So it was already trading higher, and in the previous days, momentum also created the extension of the bounce. But then we did get some solid housing data from the US. And it was the best housing data that we've seen since 2007, so another surprise to the market, and potentially a contradiction to what we've seen of late from the US data. So the market really bought up the US dollar, and it's continued to rally, and we'll see that. As you can see tonight, we do have the Bank of England minutes. Now, there may be some comments about this deflationary situation in there, and that will potentially rock the markets. And the vote hikes and the cut potential, all of this is pretty much going to be a non-event in my opinion, so we may not have too much to concern about there. It'll be all about the Bank of England minutes, so tune into that, and the market could get quite volatile if he emphasises even further that about the conditions and how that they could hang around for a little while longer anyway. And they're not going to immediately bounce back into positive territory next month at a sustainable level. We have the non-monetary policy ECB meeting, but that's going to be a non-event, I think. Keep an eye out for Fed Evans' speech on the US dollar. That could add a little bit of support if he was to mention the positive data. And everyone will be focused on the FOMC, and we'll be seeing their interpretation of the recent week data. Yes, we had some positive housing, but that's only one positive announcement on what is been a string of negative. So the market will be focused on what's the FOMC's position in terms of the recent negative data, and any likelihood of an interest rate rise will be definitely scrutinised from the market. We also have some data. We have the New Zealand budget release, Chinese HSBC in the early hours of the morning, and consumer inflation expectations for Australia. So keep an eye out for those data, as the New Zealand and Australian dollar will be in play before we move into Thursday's session. Let's go have a quick look at the charts. You can see the US dollar's bounced quite heavily off the lows. We've broken through some resistance levels that I've identified, including a major one at 95.4, and we actually closed at that level. If I go to the 4-hourly chart, we can see here that the bounce has been quite significant. We are stalling a little bit right now, testing the back of the historical uptrend line. So it's going to be interesting to see how we play out, and if the FOMC minutes can push this through, and we've created a sort of a firm bottom here for the future. However, if the FOMC really shoot down an interest rate rise potential, then this could be a near-term top. So we just have to keep that in mind. There is risk there associated with the FOMC, and then potentially, indicating that there won't be an interest rate rise in September. If the market starts to really latch onto that and is confirmed that that will be the case, well, then we could see some further falls in the US dollar. So that is a risk, and you just need to keep that in mind, even though that we have had some pretty impressive rallies of late. New Zealand dollar has fallen on the back of the strong US dollar, as well as we did get some weak dairy auction prices for the 5th month in a row, coming at negative 2.2%. So they're not having much luck in terms of their dairy price, which is contributing to 60% of their GDP. So people are worried about the future growth. Yes, we did get a bounce yesterday on the back of inflation actually coming in impressive, but market is dismissing that and saying, it can't last given the string of poor data that we are getting from the New Zealand economy in terms of dairy price. It's going to have an impact at some point, and inflation is expected to slide. So we'll see how the pressures go, and if we do continue to get a strong US dollar, I'm sure that we will see moves down into the 73-cent region for sure. Australian dollar has come through and had a fairly significant pullback on the back of weak RBA minutes. Really, they did point out all the negatives still associated with the Australian economy, and the strong US dollar is also attributing to the falls, of course. The uptrend line has been broken, and should we get a break of 79 cents, I think that opens up some moves much further to the downside, and has definitely created a top here for the Australian dollar. So we'll keep an eye on the US dollar for opportunities there. The Great British Pound has had a pullback to the uptrend line and significant support level here. I think it also correlates with any pullback in from the lows to the highs. Yes, the Fib 50 level is where it bounced off. So for now, that is support. Any break of that I see is potential for further moves to the downside. And really, if the inflation expectations and pressures continue to weigh on the pound from the statement we got coming out later on today from the Bank of England, and also if the FOMC delivers some positive US comments, then I think a breakdown of this level is possible, and we could continue to see some slides. However, if we do get a surprise from the US and they do say that we're not looking at raising rates anytime soon, well, then the market could get really dovish on the US dollar, and we could see a bounce here holding up the Fib 50 level and moving on higher with the trend. So keep that in mind. Don't get too excited just yet. We need to also just be aware of the risks that we do have coming in the market today. The euro sold off very heavily, and we are down at a major support level. You can see that it's bounced off it historically. And we need to also keep in mind that this triple top that we recently had, I shouldn't say recently, back in March, will act as support. So until we've really broken that and this uptrend line, we still need to be aware of similar risks associated to what I've just mentioned with the euro. So it is possible that we could get a bounce off here if we do get some really surprisingly weak information out of the FOMC. So that is a risk, but so we need to keep that in mind. However, a break of this would definitely open up moves to the downside, and the pressures would continue. The US dollar versus the Canadian dollar had a very significant bounce. Oil is being sold off quite heavily with the strong US dollar. And on the technical format, we are now testing the downtrend line, and you can see that it did stall at that level. If we do get a slight pullback, I would be looking for support to carve out a bottom here. But you need to keep an eye on the US dollar. As I've said tonight, there is a significant chance that it will get quite volatile. And if we have a look here at oil, you can see that it has sold off on the daily chart. So, we've broken through support levels that we were recently establishing. So now it is in a technical downtrend. And if I was to zoom out for you there, you can see that we have broken through, and we're going to come back up and test the back of these lines before we potentially move lower. So keep that in mind for the US CAD, as it will be affecting it. Now, we have had a technical breakout of this consolidating triangle early on the US dollar versus the Japanese yen. So we have had a technical breakout. Is it a fake out? Well, we won't know until after the FOMC minutes. If they are not as good as everybody is hoping, well, then we could get a pullback down and back into the consolidation area. However, if I zoom out for you, we can have a look at the consolidation pattern has been going on for some time. And it's probably safe to say that if we were to get a breakout here above $1.21.8, well, then we would say that the consolidation is really and truly broken out. How risky you want to get, if you want to pre-anticipate the breakout like many have now, getting in around these numbers, it's entirely up to you. The risk would be quite wide, in my opinion. So I'm going to wait until after the FOMC minutes, but a US dollar Japanese yen trade for the long term, if we do get a breakout, would be quite bullish for the significant amount of pips. Well, that's it from me today. There's a lot on the docket. There's been a lot of price action. I hope you've been trading well, and keep in mind all those key events that we've got coming up tonight. And until tomorrow, trade well.